What is going on, guys? What's up? Tell me if you can hear me. Looks like everything is functioning as it should, except for the fact that I need more coffee. But yeah, let's wait for a few more people to join. The inflation numbers have been released. They're pretty much in line with, I think, what economists were predicting. That's not to say that the inflation is not high. Inflation is insanely high. I mean, it hits almost a 40-year high of 6.8%. Let me see how many people we have right now. Yeah, let's wait for some more people. But inflation hits almost a 40-year high. Oh, let me share my screen. What am I doing? There you go. Yeah, so here you could see inflation hits a 40-year high almost of 6.8%. Prices are up on everything. I'm sure if you, the average consumer, can tell that the prices are up on everything. I mean, you don't need to look any further than the gas station, but it's not just there. You know, even there was a report that even the dollar store now had to pump up its prices to $1.25 on everything. However, with that said, you can look and see that the indices are up. I think they've paired some of the gains. They were up a little bit more, and I actually would not be surprised if they turned out to be flat or red by the end of the year. But currently, you see the Dow Jones is up 0.3%, S&P's up 0.5%, and the Nasdaq is up 0.36%. But that's what I was saying yesterday, was that a lot of this stuff is priced in. I was saying it in my video from yesterday. If you haven't watched it, go back and watch it. I summarize really the two things that we need to focus on now. I love this thumbnail, by the way. But summarizing the two things that we need to focus on now, which is inflation and what the Fed is going to do about it. But, you know, I think that the CPI numbers that came out, I think, unfortunate that it's that high, but I think that is pretty much priced in. So what I was saying is, for the record, if I had to make a bet, I'd say the CPI inflation data will be in line or better than we expected. Not better than we expected, but definitely in line. And the Fed already telegraphed their short-term policy, meaning they already told us what they're going to do. So the Santa rally will continue. And that's why we're seeing the indices are up. Although, as I said, I would not be surprised if we lose some of that momentum. Let's see who's on the chat with us right now. Let's see. We got Kevin. What's going on? Doc, what's up? Samson, Mark, Nikolai, what's going on, guys? Dean, Ahmet, Vernon, Gil, what's going on, guys? Conrader, hey, what's going on, man? Yeah, a lot of people in the house. Ashley, what's going on, Ashley? How are you doing? Gurpreet, how are you doing? Heaven Paradise, good morning to all of you. So yeah, let's talk about some tickers. Let's talk about some ticker symbols. And anything else? Any other questions that you might have? So Fizzle says, "What's up, Z? You definitely need coffee." I mean, come on, man. I already have it. Yeah, Doja's down a ton. Maybe another bull run mid-February. I think that, and then Sean McFadden says CRO. Young Ula says SPY. AVGO. Is it muted? No, it's not muted. Turn on your speakers. All right, so let us take a look at those. And by the way, I think there should still be the St. Jude fundraiser. Hopefully I did that correctly, but there should still be the St. Jude fundraiser button that you see there. So instead of giving me the super chats, feel free to send them to St. Jude's and let's go over this. Hello from Singapore. What's going on, Derek? How you doing? What's up, Christopher? Trip Nation, what's going on? All right. So let us take a look at some tickers. By the way, I said yesterday on the Discord, because AI was popping after hours, but it was coming up on the 21 EMA. I said, you could buy puts at the open, and although it is up for the day, you have a big red candle. This thing is down. AI is down. Whoops. Wrong one. AI is actually down since the morning, like 6-7%. So you would have made good money if you bought puts at the open. I didn't get a chance to because I was setting this shit up. All right. Someone said Doge. The thing with Doge is it's just it lost all of the momentum that it had, or any reason that it had to moon earlier this year and last year. It really lost all that momentum, and you could see it trading super flat, and it even broke major support. So I'm not hopeful. Like, what is the reasoning that you think Doge is going to rally? Right? There's no fundamental reasoning. So it would just be a technical reasoning. Now you could buy here and set a stop limit below, but there isn't really any reason for it to moon. And it's actually been one of the more boring cryptos to trade. If you look at SHIB, SHIB actually looks much better from a technical standpoint, because SHIB right now is forming this long descending channel. And this looks to be a more active technical setup than Doge, which is basically just trading flat, right? So you're expecting a pop out from here. It is holding the 100-day moving average very nicely, and we could eventually get a pop. CRO is, actually looks also good from a technical setup. Congrats if you were able to snag it at the 50-day moving average. Really, in order to do that, you would have had to have buy set up here at the 50-day moving average already, because this wick here, last week was like a flash crash. But I think it looks okay from a technical standpoint. I wouldn't be surprised to see it go back and retest like the 49-cent level, maybe the 47-cent level. But this is not a bad technical level. These descending channels, they are bearish while the stock or the coin is within them. But the product or the consequence of descending channels is usually a break to the upside. So, I don't think CRO looks bad here at all. I don't think SHIB looks that bad from a technical setup. If we take a look at Bitcoin, and then I'll get back to some of your questions. But Bitcoin is also holding the 200-day moving average slightly up today. But as I was saying on the Discord, and by the way, if you want access to the Discord, we have a group of over 4,000 traders. So sign up. Link is in the description below. Also, if you are not part of the Discord, but you want access to our weekly watch list for free, you will see a link in the description where you could put your email address and get the watch list emailed to you for free. So make sure you put your email down there. That link is in the description. If you are part of the Discord, you already get this anyway. So, what I was saying was, Bitcoin needs to come back into this channel for me to be confident about its short-term price action, but it is holding the 200-day moving average really well. So let us take a look at some of your questions. Someone says hello from Narnia. Juan Pablo Rodriguez Argente says hello from Narnia. You don't sound like you're from Narnia, bro, but all right. Doge went over, CRO went over, SPY. All right, let's talk about the SPY. Now, here's the one thing about the SPY. As I said, I would not be surprised if it turned flat today by end of day, just because the inflation numbers were, again, I think it was expected, so mostly priced in, which is why you're seeing the markets up today. But I think still bad enough for the market to be worried and for there to be an accelerated sell-off by the end of the day, meaning, if there's even, it's kind of like an avalanche, right? It starts off as a small snowball, and then everyone around you gets worried, and so the panic ensues as the avalanche gets bigger, right? The avalanche of selling. But I don't think we're going to be in bloodbath territory, but I would not be surprised if we lost some of these gains later in the day, and we might not. But the SPY is looking to make all-time highs. I think the high today was 470.08. And the high from November 22nd was 470.89. And that day we closed at 467.57. So let's see. We're above that. We're above the all-time high close at the moment. Actually, sorry. November 24th, we closed at 469.44. Okay, so that was the all-time high close. And yeah, we are nearing there now. So The thing that worries me about the SPY in the short term, guys, in the short term, not in the long term, but the thing that worries me about the SPY is if it fails to make an all-time high, that this turns into a what we call a double top. These things are not pretty in the short term, right? But that might sort of dissipate the confidence in the market if we're not able to make an all-time high in the SPY after the Fed policy next week, right? That comes out, which we already know what it's going to be after the, already expected in inflation numbers. That I think we would see a another short-term drop to maybe the 453 level, maybe the 449 level, which is around the 100-day moving average. So that would be my worry in the short term. But everything seems to be priced in for a Santa rally, to be honest. We're just coming up against this really, really ugly story here. And I said in one of my previous videos, and you guys thought it was a joke, that the Fed and inflation are more enemies to the market than the Omicron virus will be. And when was the last time you heard of Omicron? Really, at least in the US. I know that in the UK and other parts of Europe, they're contemplating crazy lockdowns or something. But, the vaccine makers already came out and said that Omicron actually, the vaccines protect against it, right? Especially if you have a booster shot, which, So, and lo and behold, that's true. Inflation and the Fed are bigger enemies to the market than Omicron at the moment. All right. I'm the only Mark in. Oh, I guess you're saying that you're the only one named Mark who's in here. MTTR stock. Yes, we actually have. I actually have call options on MTTR that I sent out in the degenerate section of the Discord. But MTTR was one of the most perfect technical setups. I love the way it looked here. Now, I should have sold those calls in hindsight yesterday because we did get that nice pop all the way to 2750. But this is a good technical setup. MTTR seems to have followed the technicals really since May, sitting at the 50-day moving average right now. So, I like the technical setup as long as this trend is still upheld. Trend is your friend until the end. So as long as this trend is still upheld, I like it. If we do fail this, then I'll start to think about it differently. And again, you could set a stop limit below. But these aren't stocks that you go all in on, right? These are stocks that you dabble in. You want to go all in on stocks like Apple. You want to go in on stocks like Microsoft. I know these are boomer stocks or considered boomer stocks. And a lot of you guys think that they don't rally enough. But what would you rather do, right? Invest in a risky stock, bleed to death, and then have to hold your bags for months and months and months, which is a long waiting period? Or would you rather invest in something that's slow moving, like the NASDAQ stocks, right? But for months and months and months, all you do is see that thing go up incrementally. I guarantee you that's a lot funner journey than having to hold bleeding bags for months and months and months, which I don't advocate holding bleeding bags anyway, but a lot of you guys do that, or a lot of beginners do that, I should say. So which one is a funner experience, right? Holding Apple and Microsoft and see it go up by 2% every month, or holding bleeding bags of bullshit that somebody on YouTube told you to buy. So and again, I don't mind buying, unproven stocks or risky stocks. That's not the cornerstone of your portfolio, honestly. If you are itching for that sort of short-term volatility, learn how to trade options. Wow, I just saw that Apple hit a high of 176.56 today. That is officially an all-time high. The other thing is, if Apple gets to 183, guys, Apple will be a $3 trillion company. That's insane. That is insane. I'm old enough to remember when we had the first $1 trillion company, how that was major news. But Apple will be a $3 trillion company if the price is at 183, and it already has price targets set by the street at 200. So Yeah. Beto Aguilar, what's going on, brother? Did I miss your summary of the markets? Yeah, I basically said, I don't know when you got here, so maybe you did. But I was basically saying that the inflation data came in line with what we expect. It is definitely high, and it is extremely concerning. And I think that the Fed is really going to have to hone in on this next week, and we will get, a more detailed answer on what a faster taper looks like, the rate of taper, and potentially when they will raise interest rates, because this is just getting out of control. However, the market had already expected that, right? That's what I was saying on my Twitter post yesterday, as well as in this video here and in the Discord, that I bet you we get a green day because that stuff is priced in. However, I can see that by the end of the day, we actually turn to slightly red or at least flat, because that inflation data is just too severe to ignore, even though a lot of it is priced in. So that is the market update, Beto, and the rest of you that were late, which is a lot of you, because I'm looking at the stream analytics now. A lot of you came in late. All right. Could TQQQ be a long-term hold? Are you crazy? Are you crazy, Jack Chu? Or no, who asked that? Bart, are you crazy? Look. Oh, you know what? I'm crazy. Sorry. I thought you were talking about SQQQ. So TQQQ, yes, that is the bullish version of the NASDAQ ETF. I thought you were talking about SQQQ. That's why I had that reaction. My apologies. My bad. But yes, SQQQ is the short of the NASDAQ, basically, right? This is a short ETF, or what they call an inverse ETF. But it is basically one long way down, because the NASDAQ keeps going up year over year, right? So if you hold this, RIP to you in your portfolio. But yes, TQQQ could be a long-term hold. Sure. You just have to know that when there are losses in the market, you have to have the stomach for it, man, because everything is magnified, right? So if you look at TQQQ right now, the NASDAQ is only up 0.71%, right? The TQQQs is up 2.5%. So in the same way that it's magnified on the way up, guess what, man? It'll be magnified on the way down. If your stomach can handle that, then yeah, sure, go ahead and go ahead and invest in it. Or you can split up your money with mostly NASDAQ and some in a leveraged NASDAQ ETF, right? So yeah. And also what you want to pay attention to is the expense ratio. So a lot of folks ignore this when it comes to when it comes to ETFs. But if you look at the expense ratio of the TQQQs, you can see the expense ratio is actually pretty high, higher than most ETFs, right? Most of the big ETFs. It's at 0.95%. What this means is that for every, it's negligible really, but you have to kind of take it into account. For every $10,000 invested, they're going to charge you $95, for the length of time that you hold that. So it's kind of like an APY, right? But yeah, so it does have a relatively high expense ratio, but it's not so bad. Again, it's $95 for every 10,000 invested, but it is still higher than holding just the regular triple Qs. So just keep that in mind. All right, let us take a look at the chat. Go over Moderna, TQQQs. When do you think the downturn of the U.S. markets will start? We all know it will happen soon. Trip Nation, this is gambler's fallacy, man. Like, I know people that have been thinking like you for years, right? There's been articles written from 2011, post the financial crisis, right? All the way until 2020 saying, oh, this is unsustainable. The market is going to crash. Oh, this is unsustainable. The market is going to crash. I mean, do your job. What I mean by that is if you find a stock that is trading at a clear discount, your job is to buy that stock and stick that shit in your long-term portfolio. And I'm obviously only talking about blue chips here, right? If you go back and watch my video, I linked to a video that I did in May 2020 where I said we will never see these prices again. And I went over how, during 2020, I went over how I bought Microsoft, Tesla, Apple when everyone or a large portion of the market was afraid, right? And they were selling here in March 2020. I said, guys, Apple's at a 30% discount. When are you ever going to see that again? Never. You will never see that again, right? Until the next crash. But by then, Apple will already be a $3 trillion company, same as Microsoft. But yeah, I had just bought Apple, Microsoft, Tesla, Home Depot, and a few other blue chips that I named in that video. But what I was saying is, do your job, man. Like, this whole fear mongering of, oh, we all know that the U.S. financial system is fucked and this thing is coming down, crashing soon. Guess what? This thing can rally for another 5 years and pass you by, right? So regardless of what the market looks like, your job is to buy up blue chips on discounts. Now, you can dollar cost average every month, regardless of what the price is. And then when we see a correction or a crash, go in heavier, right? But this whole, waiting on the sideline thing, you're going to miss the boat, and you likely did miss the boat waiting on the sideline. Unfortunately, a lot of people have this gambler's fallacy that they don't really have any reason that they think the market will crash besides it looks too high. And you're not doing your portfolio a service when you say that. I showed this on on two videos before, and it really blew. Like, I've gotten so many messages of people that really said thank you, that I showed them this. But go to just a basic dollar cost average calculator and see what would happen. We don't have to go back all the way to 2008. Let's just go back 5 years. See what would happen if you put $1,000 down and just $100 a month of brainless investing, right? On Apple, your investment would have been 4x over the last 5 years if you just put $1,000 down. And it's even crazier if you do it for a significant amount of time. So if you go back to the financial crisis, and let's just say that you bought, you put $1,000 down in Apple, and all you did was put $100 a month of your paycheck, right? Most people with a professional job can afford $100 a month. Your value would be almost $233,000 today, and your total investment would only be $15,600. So this whole, we all know it's going to come down soon, it's just a matter of when. Yeah, no shit. The market is going to crash, and it's just a matter of when. But that is not a trivial question, when, because by the time that it crashes, you could have missed out, and likely did miss out, on all of these gains right here, right? And by the time it crashes, as I said before, perspective is important. It will crash down to a previous high. Even if you look at the COVID crash of 2020, that was basically the high of 2019. That's insane, right? So as violent of a crash as the COVID March 2020 crash was, a lot of those stocks, those were the highs just a year prior. So it's not like it's going to crash to a favorable price point where you're like, oh yeah, now I'm going to get it. This is my turn. No, it will likely crash to what was the previous high not that long ago, right? So yes, of course the market will crash, but you can't use that as an investment strategy. If you see blue chips that are corrected or pulled back, your job is to buy those and start shaping your portfolio for the long term, and then obviously being able to play options for the short-term game, because in options you could play every single direction. Hopefully that makes sense, Trip Nation. But yeah, F doing crazy things. Shahid Khan says, yes, we bought F when it was like $12 or $13. Currently consolidating here going all the way back to November 9th. So it's spent a month up here. And we'll see what's in store for it, right? There is, yeah, I mean, there is definitely a divergence between the price and the indicators. You could make the case that it is bearish divergence because the indicators are going down while the price is remaining stagnant. Or you can make the case, if you wanted to put your different set of goggles on, that it is bullish divergence because the price is going up, hidden bullish divergence, and the oscillators are going down. This is really an unknown where you can't really tell just from divergence, what's going on. But yes, Ford is a great stock to hold if you bought it cheaply, obviously. All right, let me go back to the chat. Did anybody leave any donations? First of all, I don't want to miss those. Okay, no. Oh, actually, somebody did. My bad. Tim MCK, Tim Mick, I think, donated $5. Thank you so much, Tim. And Anonymous donated $5 as well. Thank you guys so much. To the St. Jude's Children's Hospital. Hi, Z. I'm down about 30% since last November investing in hype stocks. Moved all my money to QQQ and SPY stocks now. This is my retirement portfolio. Do you think I would be able to recover? I mean, MD, I don't know you. So I don't know your, I don't know your investment strategy. Bobby says, but Apple wasn't a blue chip then? Are you crazy? You're telling me in 2008 Apple wasn't a blue chip stock? Dude, the iPhone came out in 2007 and immediately became the best-selling phone of all time. Like, what do you mean it wasn't a blue chip? Yes, Apple was definitely a blue chip. If you want to make the case that Tesla wasn't a blue chip, okay, fine. But Apple, no. Apple, Microsoft were blue chips back in 2008. You can definitely say that Tesla wasn't in 2010 when it first popped on the market because it wasn't a blue chip. And a lot of people make the case that it isn't a blue chip now. And I wouldn't argue with you. But come on, man. Apple, Microsoft, come on. Yeah, MD. I don't know. I don't know you. I don't know how you invest. Do you think I'd be able to recover in the midterm? I don't know. It really depends on what you do from now. But 30% down is certainly not fun. I popped this. I'm about to pull up this. I'm about to pull up this screenshot that I had saved, and I keep referring to it because I think it is one of the most valuable tools that you can refer to, especially if you're down. And hopefully you guys can screenshot this. All right, let me pull it up. So this right here shows you that if you are down, how much your stocks need to rally by just to break even, right? This is along with the dollar cost average calculator that I showed. This right here is a revelation for most people as well. If you're down 30%, you need whatever you're holding to rally by 43% just to break even. And the situation gets more grim. If you're down 60%, you need your bags to rally by 150% just to break even. This is not, I didn't put this together. I got this. I wish I could source the person who put this together. I mean, it is just basic arithmetic. It's just basic math. But somebody cleanly put this together, and I don't know how to credit them because I don't know where I got the screenshot from. So apologies to whoever made this, but this is not, I didn't put this together. I just screenshotted it myself. So, yeah, so you need your stocks to rally by 43% just to break even. That's why holding bags is not an option. That's why buying bullshit stocks, and again, like I'm not trying to kick people when they're down. I'm certainly guilty of it myself in the past, thinking that, hey, my portfolio is going to rally if I just fill it with all these hopeful stocks that haven't proven anything. And then come to find out that the market is like, nah, fuck these stocks. We're not going to reward them. So yeah, I don't know, MD. I don't know your investment style, but if you keep buying blue chips on the dip and you keep things like this in mind, yes, eventually your portfolio will rally because the US stock market is the most resilient market in human history. So yeah. I thought that was going to be a compound calculator, but this one's so much better. Yes, Jesse, I did show compound calculators before, showing that if you had reinvested your gains in, whatever, take your pick, Bitcoin or the triple Qs, but reinvesting your gains would even, amplify the effects of this right here. But yes, I mean, this is so much easier to understand because it's sort of brainless investing, especially most people have a job and most people have a recurring income. So you could devote a small portion to the blue chips regardless of price. And as I said, like if you're still itching to actively trade, that's where options come in, right? in my view. Hi, Z and fam. Baba, please. I can't read your name because it's in Russian. Please don't ask me about Baba again. Please, guys. Like, I respect you, but don't ask me about Baba again. Like why the hell would anybody want to invest in this? Please, like, let's put our common sense hats on. And I'm not even talking about because the price tanked from 320 all the way down to $100. Where the fuck is Jack Ma, right? The guy is muzzled in a zoo in Mongolia somewhere. You know, the Chinese government is stifling him. They're breaking up all of his businesses, right? Making him sell divisions of it, turning Ant shares into a traditional bank instead of a fintech company. All because he didn't even really criticize the Chinese government. All he said was banks in China are run like pawn shops. And he's not wrong. He's basically saying that the model is so outdated that, you know, a fintech company needs to come in and disrupt the whole operation. And that fintech company was going to be a division of Baba, right? And you could tell when he said that, it was like right around here when he said that. And where the fuck is Jack Ma right now? You haven't heard a peep from him. You've seen Jack Ma lookalikes. I'm not even convinced that that's him. Okay? So please stop asking me about Baba, because just because it's down, again, gambler's fallacy. It works in the same way. Just because the stock market has rallied and you're like, oh, you know, I can't wait till it crashes. You're going to wait a long time, most likely, if you look at historical metrics. The average bull market lasts 5 years. The average bear market lasts 11 months, okay? So you're going to wait a long time if you look at historical numbers. The situation might be a little different now because the inflation picture is insane. It's the highest we've seen in 40 years. We will get raised rates next year and likely see a correction next year. But I don't even know what I was saying, man. The whole Baba thing just gets me pissed off. Like, I just don't see where when people are thinking about their investments, I don't see what line of thinking would lead you down to a path of saying, yes, this is a company I want to invest in, a company that's being forcibly broken up, a company whose CEO has disappeared, you know, really from plain sight. It makes no sense to me, right? Like, if Elon Musk was kidnapped by the U.S. government, right? Say the CIA kidnapped Elon Musk and you never heard from him again, and then they forced Tesla to sell their solar panel business and they put restrictions on how many cars it could sell. Like, would you invest in that company? No. I mean, we'd be protesting to free Elon Musk, but would you invest in that company? No, you wouldn't. So just because Baba is $100, yes, eventually this might go up. Eventually they'll find Jack Ma. You know, eventually he'll come out and do a hostage style video where he's like, guess what, guys, I'm okay. You know, after they strip him of all his billions and turn Baba into a laughingstock, right? Eventually this might go up. But why is this an investment that you want? Sorry, I don't mean to rail on you. It's not you specifically, person's name who I can't pronounce because it's in Russian. It's because I get this question every single day, and it still baffles my mind, right? Again, those are my opinions. Do what thou wilt, okay? Those are just my opinions. So what you're saying is don't ask about Baba. Edison Aquino says, great point on Baba Z. I'm glad I stayed away from it. A person with a Russian name says, thanks, Z. What do you think about shorting leap calls on Baba? Man, you are just early to the party, right? Like, you want to short a stock that is down to $100 from $300. Like, I love how you just flipped your tune right now, right? You went from, you know, asking if you can go long on Baba to now all of a sudden wanting to go short on it. Like, it's clear that you're not looking at this from an investment standpoint, but the time to short Baba was not now. So no. Hey Z, we still good on the square spread. You have to be more specific. Oh, you're talking about the calendar spread? Well, actually, all right. So the support level is around 177. As I said in my video on Square and PayPal, these are still stocks I would set stop limits on. Like, we're not out of the woods on this, even though they are presenting themselves with a potentially good price point to buy into. But these are not safe stocks at these levels, although I am okay to dabble in them at this price point. But if that 177 is broken, no, we are not good. I will likely sell my position and look for a lower entry. That's the thing with options, you cannot, like, bag holding is so antithetical to options trading, because what you could do is close out your position and just go lower, right? And you can continue to do that, which is essentially what rolling an option means, is closing your position and finding a favorable one. So no, that's a very good question. But 177 is the spot that I'm looking at intently. If we can't hold 177, we could see some more blood for Square, right? So good question. SE. Yes, SE looked like it was at potentially a okay price point to go into. However, I didn't set an alert on it yet because just like some of the other stocks that we saw, which was Square and PayPal before, when it looked like they were finding support, they kind of did this fake out pattern and continued lower. SE is a good stock, but it is highly overvalued right now. And that's not me just saying that. Just look at Seeking Alpha, right? Go to SE and you could see what its financial ratios are. It's just a horrible valuation. So while you're in this classic battle between growth and between a horrible valuation, right? So the company is growing exponentially, but it is also horribly valued. So can it grow past its horrible valuation? And that's what this run-up that you see here on SE and similar stocks is, that the market was willing to accept its valuation based on what they see as growth. But guess what? It can't go up exponentially forever. There's going to be a point where the market's like, okay, pump the brakes. This is the price at which SE is finally overvalued. And even if it grows, to expectations, it still won't be worth $243. So that's exactly what the market is saying now. So no, wait on SE. This is a horrible pattern. But yeah, you definitely want to wait on it. There will be a good entry, and I'm willing to bet that entry would be where it has historically found support around the $200 level, right? So you could see SE somewhere here, and I think that would be a steal between 180 and 200. But yeah, hopefully that stock. No, PayPal is not a blue chip. It is a long-term stock. It is a company that is expected to pull in, I don't know, $25 billion of revenue, right? Let's take a look. PayPal is expected to pull in, and by the way, guys, if you want a recommendation if you're just going to pick one site to look at stock valuations and whatnot, I would definitely get Seeking Alpha over any of the other ones, right? It's not the best for news. Like, I still like CNBC Pro and Market Watch for news. I think the news is presented a lot better and there's more editorials here. But if you're just looking for ratings, right, and you want quick valuations and quick financial ratios, where like I can click the valuation tab and I can get every single ratio of any stock, right? PE, price to sales, price to book, etc. So check out Seeking Alpha. And then, someone had asked a question about AMC Short Interest, and I realized that I hadn't looked at that in a long time. So I definitely want to check out AMC Short Interest in a second. Oh, and I want to look at Chewy, because we actually had an Iron Condor play on Chewy, and we need it to stay above 45. Oh, nice. Okay. So tanked on earnings. Congrats to those who bought Chewy puts. I didn't. I sold an Iron Condor, and I needed to be above 45. So we'll see. I might close that position out by end of day. I didn't get a chance to look at it because I was preparing for this live stream. So PayPal is expected to pull in next year around $30 billion of revenue, right? And it is a profitable company. If you look at its profitability grade, I mean, compared to the sector median, PayPal is actually doing really well in the net income and EBIT departments. So that's what it has going for it. However, it is still horribly valued based on the growth, and the growth gets a C minus. But I do think that, if folks were willing to buy PayPal, if the market was willing to buy PayPal at $308, right? And it's currently trading at $189, then yes, I think you can make a case for it here. However, this pattern is ugly. And as I said, just like with Square, I don't think you can consider PayPal out of the woods. I think that you still would need to set a stop limit on it, or just dollar cost average, because I could see there being strong support for PayPal at around the 172, 172 to 180 range. So that is the question on PayPal. Greatest. One of my friends just texted me about about the Alibaba rant. I didn't know you were watching, man. That's hilarious. All right, is SoFi a good buy down here at support? I haven't seen SoFi in a while since I sold a cash secure put on it, but I would sell puts on SoFi. It's cheap enough to where you can come in and sell the. Oh, we'll go over the options chain in a second on SoFi, but you can potentially sell a cash secure put for very cheap. Let me pull up the options chain and I will take a look for you. All right. Why am I not logged in? All right, I will log in. I'll take a look at the at the SoFi cash secure put for you after I log in. But yes, you could sell a cash secure put on SoFi for very cheap and potentially get SoFi at a cheaper price. However, these two red candles here, these two bearish engulfing candles, don't make me feel good about it for sure. So, I think you can wait before selling a cash secure put. Wait till it gets to like the $14 range. Then you could probably sell a $12 or $11 cash secure put and potentially get SoFi for even single digits if you're interested in it. But again, this is not a stock that you would overload in. I mean, this is certainly not a blue chip. This is just something that you would sprinkle your portfolio with. I don't think people understand how important position sizing is, right? Like something like SoFi wouldn't even take 1% of my portfolio. There's no way that I would let it occupy that much space, right? Will you buy Sense considering the FDA approval coming? Well, do you know the FDA approval is coming, or is it an FDA approval decision? Because if it's an FDA approval coming and you already know about it, then it is what is called priced in, right? If your grandmother can read about it in the newspaper, then it is called priced in. If it's an FDA approval date, then sure, yeah, you could play a binary event like that. But guess what? You can get burned. So Sesson is a stock that I rode. I know you asked about Sense and not Sesson, but just giving you an idea. Sesson is a stock that we rode, I think it was below $1 when we got in, and then it finally hit like $6. And I decided that, you know what, fuck it, I'm gonna let it ride because I got it for so cheap. I'm going to ride it until the FDA approval date. This was like one of the biggest red candles in stock market history. I'm just kidding, but it was pretty huge. It was a 57% candle. And it wicked even below that, like, went all the way down from almost $6 to 89 cents in one day. But this is what FDA approvals can do, right? It's a make it or break it. So, I haven't been following up on the Sense news to know if the FDA approval is coming up or not. I guess I could check. Misses on, so they missed on revenue. I don't know. Maybe someone can put it in the chat so I'm not fumbling around looking for it. But if it's something that's already known, no, I wouldn't play it. If it's something that is unknown, yes, you could play that binary event. Just know that it can go the other way. ETH versus Tesla. What the hell kind of question is that, bro? Those are two different things. Oh, I see a bunch of donations came in because the total raise went up to 4,200. So thank you guys so much for donating. I will check those in a second. Gladiators, Z, when are you coming to Dubai? I will be coming to Dubai soon, and we will be hosting another meetup. Hopefully without COVID restrictions this time, because we were only able to size it up to 10 people last time. Oh, Khaled, thank you so much, man. $20 to St. Jude's. Appreciate you. That's where the donations came from. And I think I missed a few, but thank you guys so much for donating. Unfortunately, as I said before, Rishi donated $5. Thank you so much. I just want to go back and acknowledge folks that donated. Regine, what's going on, Regine? Always good to see you. Sammy, Yozi, looking good. Will you be doing more penny stocks? Probably not, because I realized that I have a responsibility and people don't know how to size their portfolios. And when I talk about penny stocks, you know, I see in the comments of the YouTube videos, I know it's not my it's not my, I guess, responsibility, or it's not my fault, but, you know, people still need to need to take accountability for what they do with their own money. But, you know, I do see that people still, regardless of how much I talk about position sizing, will take a penny stock and be like, yes, this is it, and go all in. I don't know. It rubs me the wrong way. I'd much rather talk about sensible investing and hammer on the blue chip point. We'll see. I don't know. You know, and me personally, I'm not investing right now in a lot of penny stocks because, you know, the small cap, mid cap stocks are getting killed. So it's not the landscape for them. All right. Hit that like, folks. Oh yeah, I didn't tell people to hit that like. Sammy donated 200 pounds to St. Jude's. Appreciate you, Sammy. Thank you so much, man. Very, very generous. Thank you so much. Square and CrowdStrike. Okay. Anonymous donated $20. Thank you so much, Anonymous. Clear Haze, always donating, always watching. Appreciate you, Clear Haze. Thank you so much. Drusia says hi from Latvia. Hey, that's a country I haven't visited yet, but I hear good things about it. Bruno Valente. Hey, Z, I sent a donation. Just want to say thank you for everything. Thank you so much, Bruno. Thank you for always watching, always donating. Anonymous donated $20. Another Anonymous donated $100. Thank you so much. Oh, Tim Mick. Okay. And Control Films donated 20 pounds. Always donating, always watching. Thank you so much. Tim Mick, can you look into PH? I have about 30% of my retirement portfolio. 30%? Jesus. I mean, it's not a bad stock, right? Pays a good dividend, comes in with good earnings, decent revenue. You know, unless you work for the company, that's a, I don't know, 30% is a lot. Let's look at its history. I mean, I guess, I mean, it does move like a blue chip. It's been around for forever. This is the monthly chart on PH. So I think I'm not going to make any retirement decisions for you, but I think this is an okay stock. Oh yeah, you did say that. Been working there for 20 years. Okay, that makes sense now. Stock always does good, but should I diversify more out? Tim, I don't mind giving you technical analysis on PH. I, however, don't feel comfortable telling you what to do with your retirement money. That is your livelihood, and listening to just some guy on YouTube who used to be in finance, you know, tell you what to do with retirement. I'm not comfortable doing that. I'll tell you what I would do. In my view, I think that, you know, if you've been working for the company, you probably got the stock for very cheap. The stock is clearly acting like a blue chip, right? It comes in with good revenues, and earnings, has, you know, pays a decent dividend that you can, hopefully you're reinvesting those dividends. Yeah, I mean, I don't see like what would you diversify out of, right? This is just as good as any stock that you can get into, that you would diversify into, right? Unless you see a juicy opportunity, I would think to myself, you know, what am I selling this to diversify into? So other than that, man, I don't feel comfortable telling you what to do with your retirement. All right. Alia Hegazi, can you check out Amazon? Regardless of green indices, it's always a lagger. I mean, it's not. This is the thing. It's not really a lagger if you zoom out. It's a lagger if you're a recent investor in Amazon. Otherwise, Amazon is a freaking beast. Was $1 and is now $3,500. So how much more are you asking from Amazon, right? Right now, it's just trading in a sideways range because this is the range in which the market thinks Amazon is priced at. But what are you expecting it to do? You know, if it goes from $1 to 3,500, not many stocks in human history have done anything like that. So, you know, I'm not sure what your expectations are. Is that it goes up another 3,000? You know what I mean? So it's really important to zoom out and really sort of ground your expectations here. You know, great stock to invest in, not going to be a fast mover by any means. So, all right. The Dwighty donated $10. Thank you so much. The Dwight Way. Thank you so much, the Dwight Way, for donating. Did I miss any questions? Anonymous donated $20. Thank you so much. All right. Let's see. Bruh, you should update your Chrome. Oh, yeah, this update button here, it's been there for a long time. No, I have I'm taking a stand. I'm not going to update it. Docu at a good buy point. I'll look at Docu. BNW Wellington donated $5. Thank you so much for donating. Hans Benz, do you CrossFit? No, I definitely don't CrossFit. I'm too old to CrossFit, man. I'm not trying to break my back. You know, I try to leave it all out on the basketball court and the soccer field. That's the extent of my cardio. Otherwise, no, I just lift weights. Tamer donated $20. Thank you so much, Tamer. What's going on, man? What is going on? Thank you so much for the donation to St. Jude's. Okay, I'm getting a couple questions on Docu, so we'll go over that. Cameron, love the channel. Thank you so much for tuning in, Cameron. Simple Soul, respect your work. Peace from Amsterdam. Peace from Amsterdam. Haven't been to Amsterdam in a while, so definitely due for a trip. All right, I got like 3 or 4 questions on Docu and a couple questions on Ethereum. And guys, if you did make a donation and you have a question, please leave it in the chat and let me know. Otherwise, let us go over Docu. It's a very similar pattern to what you see with SoFi, PayPal, Square, in the sense that, you know, it looked like it was finding support, had a few green days, and now it is retracing. But, you know, I don't mind an entry on Docu here. Again, it's position sizing that's going to determine whether you're going to get killed or not. You know, it did come in beating revenue, beating earnings. I think it gave pretty muted guidance, which is why it dropped. But yes, I mean, I think that you can entertain dollar cost averaging at this level. I don't think you'll see it mooning overnight. Certainly not. But yeah. The E on your chart means exit. No, the E on the chart means earnings. I don't know if that was a joke. But it means earnings, not exit. What about Robinhood? RIP to Robinhood and Coinbase. I was looking up Restoration Hardware. Sorry. RH. It's really Hood. RIP to any stock that Kathy holds. I mean, this is just insane. You know what's so funny is I got into, not an argument, but somebody had left. I was talking about NEO, and I knew that a lot of folks will get butthurt because I was saying, that, hey, watch out if you're investing in NEO because of the way that the company's structured. It's really a holding company that's based in the Cayman Islands, and you're not buying NEO shares. You're buying receipts that are supposed to represent NEO shares. So I just said, hey, guys, be careful. This is the structure. If you still want to invest in it, fine, right? And I got a bunch of hate, and someone was saying, oh, BlackRock had bought X amount of shares in Neo, and XYZ hedge fund bought X amount of shares in Neo. I think that institutions and professionals know more than we do. And I was like, man, take a look at Kathy's portfolio, okay? And I can't remember who. I got to go back and find the tweet, but somebody had basically summarized. Oh, you know what? I actually put it in my own Twitter. So let me go back and find it. But it was hilarious. It basically detailed every single one of Kathy's right here. It was PensionCraft, okay? A user named PensionCraft on Twitter. He said there's a bear market for all but 4 stocks in Kathy Wood's ARK fund. So looking at all of her stocks, I mean, it's insane, right? Square down 35% from highs. And considering where, from where she had added some of these. DocuSign down 56%. Roku down 57%. DraftKings down 60%. So what I was saying is, don't like if I ever receive another snarky comment about how institutions know more than people on YouTube, I'm just gonna leave that there. And then I followed up with, institutions can be just as idiotic as the public that they're trying to take advantage of, right? If you remember, the folks who underwrote the DD IPO, JP Morgan, Morgan Stanley, and Goldman Sachs, they're the main underwriters of the DD IPO. That company IPO'd in June, and now it's off the market, right? So, or about to be delisted. So think about that. A bunch of billionaires got wiped out by Reddit apes, not once, but twice this year, right? So be careful about, putting all of your faith into what institutions are doing and kind of taking their word as spoken word. But all that is to say, no, I definitely don't like Robinhood here. Coinbase is the same thing. I mean, these stocks are unproven, and the market is making them pay and rewarding blue chips, rightfully so, right? And we've been saying time and time again, load your portfolio with blue chips. Now, there will be an opportunity here, but that opportunity is not now, not when these charts look like this, right? All right. So, Frank, I'm selling everything and running for the hills. Why are you saying that? Markets are, they did pair some of their gains today. As I said, I do expect this to dwindle over the course of the day, right? So the Dow's now up 0.11%, S&P's up 0.3%, Nasdaq's up 0.14%, was looking a lot stronger earlier. But again, this inflation data is too severe to ignore. So I can see where we turn red by the end of the day. Pros and cons about options. Can you give me an example? How do you see AMD and cloud first? I'm not sure I understand the question. Pros and cons about options. How do you see AMD and Cloudflare stock? Those seem like extremely different questions. I'm not sure. Rephrase your question. All right, Christian donated. Let's see. Christian donated $11 St. Jude's. Thank you so much, Christian. Zachary Walker donated $5. Thank you so much. Christian donated another $5. Thank you so much, guys. Thank you so much for the donation. 80% of my retirement in Doge. Jibba Jabba, I noticed you trolling, but you're not even a funny troll, dude. You're not even a funny troll. Amazon needs a stock split so more retail can get on board. Yeah, eventually. You know what's funny is Amazon split once. Like, I think there's this thinking that Amazon never split. Amazon actually split once in history. But that once was like 1999 or something. Hood for holding 3 to 6 months. Good idea. No. What's under the hat? Something that your mom likes to play with. Keep trolling. Keep trolling, Jibba Jabba. All right, blah, blah, blah. What's the best long-term stock to buy? That's not really an answerable question. There are hundreds of thousands of stocks. Why you look high all the time? Probably because I wake up every morning and do my job. I don't know, because I'm up early, I guess. Happy Friday, Z, all the viewers too. What's up, Tanya? What's going on? Kathy Woods still your baby mama or not? No, I retired Kathy Woods from the baby mama designation. This happened a long time ago. It is now Nancy Pelosi. Nancy Pelosi is the best trader in the game. You guys don't even know. I mean, if Kathy Wood followed Nancy Pelosi's advice, she'd be rich. But yes. Greg S. donated $5 to St. Jude's. Z, you said yesterday, thank you so much, Greg. If the numbers were right, you saw the S&P going to new highs in the next couple of days. Do you still see that? Yeah, but it really depends on what you mean by right. I said that if they're better than expected or in line with expectations. Now, I do think that a lot of this is priced in, but it's, the inflation is still too severe to ignore. I do think we still get a Santa rally. But again, I think the market is going to brace themselves for December 15th. Mark that day on your calendar. December 15th is the next Fed meeting, right? So, I think that's what the market is waiting for, to see if Papa J. Powell actually holds his tongue or says something that he's not supposed to say. Yeah. So, but just so you know that in terms of the expectations, the CPI increased 0.8%, right? Economists had forecasted 0.7%, so came in slightly worse than expected. But if you're expecting a 0.7% increase in the CPI and you came in at 0.8%, then most of it was expected, right? Do you think SHIB can save Robinhood? No. Dude, what are your views on all the hype Finfluencers? Finfluencers. Wow, that's a new one. Trip Nation asks, what is a finfluencer? Give me an example of who is a finfluencer. And then I'll let you know, because I'm not sure I understand this term. But if you tell me who you're talking about, I will definitely give you my opinion on them. Thank you for opening my eyes about Hood and Neo. No problem, Safe. What is your opinion on Zoom? Do you think it will recover? I have been saying this time and time again. Go back and watch my videos. I don't know. I can't even tell you what video it's in. But this was back when Zoom was at around 250. I was saying that I don't mind an entry in Zoom. I just don't see how Kathy Woods has it as the second highest holding in her portfolio. Like, how is Zoom and DocuSign the second and sixth largest holding in your portfolio? That is just asinine. That's insane, especially as the world is opening back up. And by the way, guys, if you're on the live stream and you haven't hit that thumbs up, apparently it helps the YouTube algorithm and helps people find the live stream more. So hit that thumbs up. Take a second to do it, please. Yeah, I just don't see how the justification that in a world that's trying to open up, you have Zoom and DocuSign in your top 6 holdings. That just doesn't make sense to me. Like, I don't care how innovative ARC Innovation is trying to get. Not recognizing where the fuck we are in the landscape is, to me, that was such a blind move. Like, yeah, it's easy to kick Kathy while she's down, but I've been saying that for months before this drop on Zoom, before the drop on DocuSign. I just don't understand how, as a money manager, I don't care what you're trying to shape your portfolio to look like. And I get it. The ARC Innovation is like, oh, this is the new way of doing things, right? She's trying to be less boomer about her investments. But, second and sixth largest holding being Zoom and Docu, that's just insane to me. But no, I don't think it's, I think, again, this pattern here is recurring. You've seen it now on a lot of the fintech stocks, and you've seen it on DocuSign as well, where we get this fake bounce and, it looks like it's retracing. But there is a critical support on Zoom at 180. Yeah, I don't mind owning Zoom. I mean, it will probably enter one of the large indexes soon. But yeah, Papa Powell is a finfluencer. Is that who you're talking about? Or is that a joke? I don't know. Slurpee Joe doesn't give a shit about your stock. I don't know. Slurpee Joe. Oh, are you referring to Joe Biden? I mean, unfortunately, you're wrong. That's where you're wrong, because studies have shown, not studies, but data has shown that regardless of who the president is, right, the U.S. stock market is the most resilient market in human history. So I will actually pull this up and I'll show you that, especially recently, the stock market has actually done better under Democratic presidents than Republican presidents. And that's not hyperbole. Let me find this chart for you. President, blah, blah, blah. Let me see. There's a chart that summarizes this real well. Yeah. So if you take a look, and it doesn't include Biden for this one is, let me see if I can find a newer one. But anyway, I'll show you what I'm looking at. So if you look at the stock market by president, let me see if I can, how do I enlarge this? Let me see if I can enlarge this. If you look at the view image, open image and new tab, let's see what this opens. So if you look at the stock market by president, you could see that, you know, under Clinton, under Obama, the stock market rallied, you know, insanely. Obviously, you had the dot-com era in Clinton. You had the post-financial crisis era under Obama. Bush had a nice run, but he did have that insane crash. And then back here, you have Bush the father, Ronald Reagan, even Carter's, you know, and I think Carter's a good dude. I think, you know, he does show some humanity. But, you know, he is seen by lots of folks on both sides of the aisle as being a terrible president. Even the stock market rallied under Carter, right? We saw that crash after Nixon, but it's because he was involved in shady shit and was forced to step down. But then once Ford took over, once Henry Ford. Oh, wow. I'm getting my names mixed up. Once Ford took over, you can see the stock market rallied again. But really, under Kennedy, under Lyndon Johnson, I mean, under Eisenhower, we had obviously the post-World War II age under Eisenhower. Even under Truman, while World War II was going on, you saw the stock market rally. So it doesn't matter who the fuck the president is, right? Under Trump, you saw a great stock market. And under Biden, you saw a great stock market. You know, I see that comment a lot in YouTube, and it just makes me laugh because I think people are folks who are fanatical about politics and politicians. Guys, these are not your heroes. Like, these are not your heroes, right? These people are paid. There's a reason why politicians leave their positions exponentially richer than when they came in. These guys are not your heroes, okay? But it's clear the market doesn't give a fuck who's president either, right? So all of this, oh, this president's going to tank the market. No, the U.S. capitalistic system is set up so that a person like Bernie Sanders cannot become president, right? So their whole thing was, fuck, we can't have Bernie be president because then this picture here will change, right? So it's got to be one of the two main political candidates. It's got to be either a mainstream Republican or a mainstream Democrat. And this is why. So, you know, those of you who think that a certain president, if he or she's from the mainstream, is against the stock market, you're freaking crazy. Okay? Definitely not against the stock market. All right. Sometimes I check out TradingView charts between sets while I work out, and I bet Z does this too. I try not to, but yes, sometimes I can't help it. But the reason is I live in California, so I'm actually fortunate because the stock market is, you know, closes at 1 p.m. California time, so I have the rest of my day to do whatever. But yeah, I'm certainly checking after hours a lot, even though I try not to. Morning, Z. Work kept me away. Now I missed your stream. No, I'm still on. I'm still here. All right. And plus you can rewind it, even though it's not as good when you rewind it, just like sports, right? You got to watch it live. All right. Trip Nation. Finfluencers like Graham Stephan, Andre Zick, Meet Kevin, and check out Financial Friend. No, I don't even know who Financial Friend is. Okay. Graham Stephan. Graham Stephan, you know, I think he figured out a way a long time ago to crack the YouTube algorithm, and kudos to him, right? But I haven't really seen him give bad advice or really shill as hard as some of the other ones. I do think it's funny that, you know, these guys started as real estate influencers. You're talking about flipping houses and shit and how to buy your first rental property in a bad neighborhood or whatever. But, you know, they transitioned to stocks because of the algorithm. Now, I do think that some of them don't know what the fuck they're talking about. But Graham, from what I've seen, I don't watch a lot of Graham, but from the videos that I've seen, I don't think he tries to overstep his bounds and talk about something he doesn't know. Now, there's a few stock YouTubers who I can, just by the way that they talk, by the charts they pull up, the way that they discuss financials and technicals, clearly have never worked in finance, have no business talking finance. They just went to Best Buy during the pandemic, were bored as fuck because they were sitting at home, and were like, I'm going to buy a camera and I'm going to talk about stocks because that's a quick way to grow my channel because I see all these stock channels, blowing up. And so most of them that I'm talking about started their channels last year, right? This channel actually had very slow. It took me a year to get 10,000 subscribers back in 2017. It took me a year to get 10,000. It took me, I don't know, 2.5 years to get 100K, maybe 3 years to get 100K. So yeah, I mean, this channel is definitely pretty old now comparatively, but Graham Stephan, I don't think he's a bad guy. I do think that he doesn't overstep his bounds, which I respect. Yeah, he will make videos about the stock market because he knows the algorithm. He's watching that shit like a hawk, and kudos to him. And he clearly came out and said he's not trying to pose as something he's not. He said, I make more money from YouTube than I do from actual real estate, and I don't even really do real estate anymore besides the rental properties that he owns. Again, I don't know much about his current state, but I've heard him talk like that. I can't remember the other ones that you named. Oh, Meet Kevin. Yeah, I think Meet Kevin is really just banking on his subscriber numbers, right? Like, he has such a high subscriber number that he can literally make a video, and if only 10% of the audience watches, then he makes a great revenue from YouTube. I haven't seen a lot of his stock content, to be honest, but I do shy away from people who flaunt their wealth on YouTube. So if a stock YouTuber said, hey, I just put 10 million in this, right? Obviously, he or she's doing that for the clout, and I think that's a bitch move. Because one, your audience cannot do the same. Two, they have no reference for how much of your net worth that represents. So they just see that as a big number, and to them, they might then overload. So if someone says, I put $1 million in PayPal, or I put $5 million in Square, to you, that's just a big number. That could represent a small portion of someone's net worth who's a high net worth individual. And so it might really deceive millions of people to do something that they probably shouldn't do. That's part of a big reason why I don't show balances, because I don't think that there's any reason for it other than clout, right? I don't think there's any reason for it whatsoever. I would much rather talk about percentages. I'm saying regardless of what your net worth is, right? Whether it's 5K, 1K, 500K, right? The principles don't change. You continue to shape your portfolio, make sure it's quality for the long term, sprinkle a little bit in high growth plays if you can't help yourself, and then, play options on the side and try to find a consistent winning strategy with options, whether that's selling spreads or selling cash secure puts or selling calls against your shares. But yeah, so I don't see, I don't find any dignity in showcasing how much money, if you're a high net worth individual, you spent on a certain stock, because that is just a signal to overload for the average person, right? And I don't think that's responsible. But that's what I think of those people that you named. I don't even know who Financial Friend is. Andre Jick, is he the magic guy? Yeah, I don't know. I know he does card tricks. All right. Thoughts on Traveling Trader being the GOAT? I appreciate you, man. Shauna, who is your favorite Stonk YouTuber? I don't really have one, honestly. Most of the stuff I've been sent is not great. I'll say that. And there are smaller channels that I do like, from a technical standpoint or from a day trading standpoint, but yeah, I don't really have a go-to person that I watch. I just watch the TD Ameritrade Network and I watch CNBC, really. But yeah. And then I watch my videos because I have to edit them. But other than that, even my own videos I don't watch. What do you think about GGPI? I think this is an easy candidate for selling a cash secure put. I sold a cash secure put. It puts my cost basis on GGPI at like $9. So yeah, but I wouldn't go heavy on something like this. I don't know if the Polestar merger is confirmed or not. If it is, then I think $11 is cheap compared to how some of the other EVs are currently trading. But I always look at Fisker as a good conservative benchmark, right? Because Fisker is currently trading at $18, went all the way up to $24. So it's certainly not a Rivian, which is totally being propped up right now by the markets. But I look at it as a decent benchmark. So I don't think that you'll get Tesla numbers on GGPI, but I don't mind buying it in the single digits. You are my favorite trader to follow. You help a lot. Thank you so much, Giovanni. Can we do Intel, please? Yeah. Let's see. So Intel is a very volatile chip stock, to say the least, but it's because the market knows that it's poised for growth. It's just what it's doing is going to take a long time. So currently they're building out a fab, right? A fabrication plant which produces chips. They might be building two. Someone in the chat, correct me if I'm mistaken. I think they're building two, but fabs take a very long time to build. That's why the chip shortage issue is taking quite a while, aside from the supply chain issues, right? Like the supply chain issues are a whole separate thing, but to build out a fab in order to try and scale and meet demand, building out a fab takes 2 to 5 years. And so, what Intel is planning on doing is really a long-term game. Now, they do see pops here and there because, their name pops up every time that they win a contract, or every time the government mentions that they're going to be a beneficiary of some sort of spending bill. But yeah, it is going to be rather volatile. I mean, if you take a look at the weekly on Intel, it's not pretty. Most blue chip stocks don't look like this on the weekly. They look like one long trend up. But Intel has been really trading between the $42 and $60 range for 3 years now. So it is going to be volatile. It will have a place in my retirement portfolio because I do think that they will eventually become a powerhouse again in the US, but it's going to be volatile. So it's not a pretty hold. Yeah. All right. Tell them, Z, they don't get it. Oh, and were you talking about the president speech? Yeah, man. I mean, it's like, come on, like these guys are not your heroes. Like, who gives a fuck who's the president? Right, the markets are going to go up because it's designed that way. Z is the only YouTuber who doesn't ban people from lives for trolling. No, dude, I don't have that time. Gerald Ford, that was it. Not Henry Ford. See, I knew Henry Ford was obviously the car guy who created Ford, and the name Gerald, which should be retired. Sorry if any of you are named Gerald. Yes, I couldn't remember it off the top of my head, but yes, Gerald Ford. If Henry Ford took over, it would be the biggest rally ever. Yes. If Henry Ford were president, we've had pavements in. That's so funny. All right. People don't know history. That's just blah, blah, blah. Okay, Cameron donated $20. Thank you so much, Cameron. All right, I'm trying to find some good questions. Bernie is a real one. Yeah, I mean, regardless of what you think about Bernie, regardless of what you think about his politics, and certainly people on Wall Street didn't want him to be president. You cannot deny the guy's integrity, right? He's been saying the same shit for 50 years. And for 50 years he looks like one of those. I don't know if you've ever been to like a Home Depot or like a Walmart and there's, an old person at the front greeting you. And they're basically there because they're collecting health insurance, which is a sad state of the country that we're in, that these people don't get health insurance, right? So they have to find jobs. They retire and then they have to find jobs in order to get health insurance benefits. And so they join companies like Home Depot or Walmart. I've even seen this at Starbucks. But that's what Bernie reminds me of every time I look at him, right? He's just got this like disheveled look of somebody who has retired but was forced to come out of retirement, but he'd rather be at home in house slippers, right? But yeah, I mean, he is a real one. Like, you cannot deny his integrity. The fool's been saying the same shit for 50 years. But yeah. How about M3? You getting a new one? No, I'm not getting it. I actually just ordered a car, but I won't reveal what it is. But yes, no, it's not the new M3. Mongoose Coin, guys, stop with the spamming. I don't care about the trolling, but stop with the spamming, guys. All right. All right, we've been running an hour and a half, so I'm thinking of ending it here because I actually need to trade and get back to the group. And guys, if you're not if you're not part of the trading group, come join, be a part of 4,000 beautiful people. And again, if you're not part of the trading group and you want my free watch list, put your email address. You'll see the link in the description. My watch list will be sent to you for free every week. So yeah, if you want that and you're not part of the trading group, just feel free to put your email there. I will send it to you absolutely free. All right, guys. I don't think. Yeah, I think that is it. I think we should wrap it up here. And yeah, thank you guys so much. Leave a thumbs up on your way out. Appreciate everybody that joined the stream. Appreciate everybody that donated to St. Jude's. That is such a boss move. So thank you guys so much. And I'm sure the people at St. Jude's appreciate it even more than I do. All I have to do is pop up a live stream and, you guys do the work. So I can't even take credit for that. But yeah. Thank you guys, and look out for the next one for sure. I love doing these. I will try to do maybe 2 next week. So if you want me to do more live streams next week, leave a thumbs up on this one, and I will do probably 2 next week, and we'll go over some of your fun questions again. All right, guys. Hope you have a great weekend. I will talk to you soon. Peace.